Hello. Welcome to my channel, my dear friends. My name is Savilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of DXY US dollar index, and as discussed in our previous videos, that market will try its best to break the resistance. And yes, during the last trading hours also, DXY tried to break the resistance and move higher, but ultimately it failed and closed at 103.43. This is the last traded price of DXY. But if you look at the chart of DXY carefully, then we can see that overall the market is an uptrend. Okay, but here market has formed an ascending triangle pattern. Ascending triangle pattern is a bullish pattern where we have a resistance at the top, and whenever market comes down, market forms higher low here. So the formation of higher low indicates that buyers are very much serious, new buyers are joining, and there's a high chance that market will break the resistance and move higher. And as we all know, my dear friends, that fundamental factors are also helping the XY to continue the upside. So there is a possibility that by the coming week, we will get to see upside on the chart of the US dollar index. So the overall levels are still the same. The resistance of 103.60 is still very much present. DXY needs to break this level to continue the upside. In case the buyers surrender, and if we get to see a reversal kind of thing, then 102.80 will be the first support, and then 102.50 will be the second support. We have discussed plenty of times why these levels will be working as support, so please watch any of my videos, you'll get to know. Okay. So these are the three levels on the chart of DXY right now, but yes, there is a possibility of upside in the coming week. And if you look at the forexfactory.com or any economic calendar, you will see that on Monday and Tuesday we don't have any news. So Monday and Tuesday technicals will mostly dominate the market. On Wednesday we have PMI at 7:15 p.m. Indian time. Before that, there is no big news in the market, so more or less you can expect that technicals will dominate the market. Now let's look at the chart of gold. Yesterday when I was recording the video for the Hindi channel, gold was somewhere around here, and we talked about the possibility of a downside, and we got to see a little bit of a downside also, and gold closed at 1889. My dear friends, if you are looking for Hindi analysis, then this is our Hindi channel that I have started recently with my wife. अगर आपको हिंदी समझ में आता है, अगर आपको हिंदी एनालिसिस की तलाश है, तो आप बेझिझक इस चैनल को सब्सक्राइब कर सकते हैं. सुबह आपको अपडेट मिलेगा मेरे इंग्लिश चैनल में, और शाम को जस्ट बिफोर द यूएस सेशन इस चैनल पे हम लोग वीडियोस अपलोड करते हैं, ताकि पूरा दिन आपको अपडेट्स मिलता रहे. ठीक है, आपको लिंक डिस्क्रिप्शन में मिल जाएगा. फील फ्री टू सब्सक्राइब. So if you look at the chart of gold, then obviously there is no doubt that this market is in downtrend. There is no doubt that this market is downtrend. Sellers are dominating the market. Market is continuously forming lower lows and lower highs. But here you can see that market did not form a lower low. Rather, market almost took support at the previous low here. So this may be an indication of a little bit of a trend reversal or some recovery in the coming week. And already we have discussed in our previous videos that market has tested the resistance too many times, which is not a good sign. Obviously, after testing a level too many times, market go for stop loss hunting, market go for some liquidity grab, and here also we may get to see a similar kind of a thing. See, recovery, correction, trend reversal are all different things. For a proper trend reversal, we need the backing of fundamental factors. As we can clearly see on economic calendar that the next news is coming up on Wednesday. So till Wednesday, mostly the technicals will dominate the market. In that case, if market shows some upside also, that will not be a complete trend reversal. That will be just a temporary recovery you can consider. As a trader, you need to understand what is the role of technicals and what is the role of the fundamentals. For any trend reversal, news is important, fundamentals is important, but right now we can clearly see that we don't have any immediate news coming up. So but technically we can see that there is a sign of some recovery. So yes, there some recovery may come, market may go out of the channel here, but it will not be a complete trend reversal. We can still consider that market will be in downtrend and we can look for a sell position only. Okay, so let's discuss the possibilities here. Those who are still holding buy position on gold, my dear friends, you got the fire, you got the daredevil feeling. Okay, don't do that. Okay, because still there is a possibility of a downside on the chart here. Technically, obviously there is no support on the chart. We have already discussed in our previous videos also that if market below 80-90 level, we do not have any immediate support. This was the last support here, and right now you can see that market is trying to go down here. So technically there is no support here below this level, but if we look at the contracts, then around 1875 we can see that we have a good number of contracts. It is reducing. Okay, you can see minus 61, it is reducing, but still there will be a bounce around 1875 level. If not a complete trend reversal around 1875, we can expect a bounce. We can see a significant rise in number of contracts at 1860. Okay, so 1860 is also coming up as a support for the next week here. So from the contracts data, we have two support levels, 1860 and 1875, but the problem is that this data changes. Okay, so you need to be careful. Do not expect that there is support means it will be a trend reversal. No, there is no guarantee like that. Okay, so this is the chart, and on Monday, right after the market opening, okay, we need to observe the volatility of the market here. So as we all know that volatility of the market plays a very dominant role. Right now I'm in a 1 hour time frame of gold here. So if market shows upside, okay, if market shows upside, just like the previous times, do not take a sell position at the 50 moving average around 1893-94. Do not take any more sell position, because there is a high chance that this time market will be going up. Market will try to break the trend line here. Market will try to break the 50 moving average here. This time you can look for some selling opportunity around 1900 level, because around 1900 level we have the 100 moving average. Okay, but be careful, volatility will obviously play a dominant role. If the market is low volatile, in that case you can expect 1900, 1899, 1901, this particular range to be a resistance. If you see the market is struggling around the area, just like the previous times, if you see market is showing price rejection from above, you can go for a sell position for 50 to 60 pips at the 100 moving average on 1 hour time frame around 1900 level. 1900 level is a round number also, so it will also act as a psychological resistance for the market. But in case market is volatile, if market goes up with big green candles, then obviously 100 moving average will not work. After all, no level is permanent in the market. My dear friends, we are traders, not gamblers. We cannot trade blindly. If you see that market is standing at the 100 moving average with a big green candle, then obviously you need to be careful. Okay, do not look for a sell. In that case, observe the market around 1910 level. Okay, 1910, or it can be 1909. Around this level, you have the second resistance for Monday. Why? You can see that we have drawn Fibonacci here. Okay, Fibonacci and Fibo 23.6% retracement level. Along with that, previous support will be working as resistance, and we also have the 200 moving average present around this area. So around 1910, 1909, we can expect a good selling pressure. If market reverses according to expectation, if we see good price rejection from above, we can definitely go for a sell position. And the last resistance for Monday is around, again, is around 1920 to 1925. We have already discussed this in our previous video. The 1920-25 is also a good level because of previous resistance. You can also see Fibo 38.2% retracement level, and along with that, the previous support will also be working as resistance. So three factors are also pointing out that 1920-25 is also a major resistance for the market. So in absence of any fundamental factors, if market shows upside also, the sellers around this area will create some trouble, and we can expect that gold will face some problem. Gold will struggle around this area, and we can take a sell position. So 19, 20, 25 is the third resistance, last resistance, best resistance. Below that, we have resistance around 1910 level and the weak resistance around 1900 level. So these are the three resistances on the chart of gold where we can look for a sell position if market shows upside on Monday, because there's a high chance that market will be going out of this range here. Market will break the trend line here, and in that case we can look for a sell because the market is still in downtrend. In this downtrend market, the best trading strategy that you can follow is sell on rise. Okay, sell on rise is the best trading strategy still you can follow on the chart of gold in absence of any fundamental factors that will push the market towards the upside. During the weekend, if any news comes out that will push the market towards the upside, that's a different chapter. Then you'll have to reconsider the market again. But right now, we don't have any news. So in absence of any news, sell on rise is the best trading strategy. But yes, as market is inside a range for a long time, high chance market will break it. In that case also, your strategy should not change. You can look for sell on rise only, but at other levels. And right after the market opening, if you see the market is going down, gold is going below 1885 level. Okay, so in absence of volatility, in absence of volume, taking a sell at breakdown is a little bit risky. But if you see that market is going down with big red candles, you can look for a sell as well. But keep in mind, especially on Monday, especially during the first half of Monday where we do not have much volatility, okay, taking a sell below 1885 can be a little bit risky. But still, if you want to go for it, you can go for it with proper risk management. That's your personal choice. I will not suggest it. Okay, but still you can go for it. You can expect around 30 to 40 pips. Okay, because we have seen that in this market structure, okay, market is forming a low at 50 pips difference, around 50 to 60 pips difference. So if you take a sell around 80-85, try to exit around 1881. Okay, but yes, be careful. For breakout or breakdown, volume is extremely important, and usually in the first half of Monday we don't get to see that. Okay, so that's all about the chart of gold. Hopefully you got the point, my dear friends. So this is my analysis. I can be wrong as well. I'm also a trader like you. So please follow proper risk management. Do not gamble with your hard-earned money. See you on Monday and have a happy weekend. Bye bye. Take care.